How's it going, guys? Welcome back to another video. Today we're going to be going over my Vanguard Roth IRA brokerage account, and might as well, since we're here, we'll go over my regular taxable brokerage account. Pretty small portfolio. It's the portfolio that I started out with investing, but I never really contributed more money to this account. As you can see, I mainly have most of my money into Robinhood rather than a Vanguard regular brokerage account. So we'll quickly go over my regular brokerage account, and then we'll go over my Roth IRA brokerage account here, which I have around $22,000 in. This Vanguard one is a taxable account, so you're going to be paying taxes on your gains, your capital gains when you sell, as well as any dividends you make. So this is a taxable account. I only put in $2,000. It's almost at $3,000. And my main holdings are VOO, which is the S&P 500 Index ETF, one of my favorite ETFs, and I highly recommend it. Vanguard ETFs have some of the lowest expense ratios out there, and they are some really good performing ETFs. So VOO, we have 2 shares of that, roughly around $800 into this. Then we have VTI, which is the total stock market ETF. And VTI is also a great one. So my mistake with this portfolio is there's a lot of overlap. There's no reason to get both the VOO and VTI. They roughly track the same thing, but there is some smaller cap stocks in VTI that you don't get with S&P 500 ETF. So we can take a look at the historical charts, and we can see that the performance is going to be relatively the same. The VTI has small cap stocks, so it's going to be a little more volatile, a little more risky, but the reward will be slightly greater if it does pay off. So we can see past 5 years, VTI is up 103%, and VOO is up a little less than 99%, a little less than 100%. Sorry. So the dividend yield on VOO is going to be a little bit higher. We can see 1.37% versus 1.28%, and that's because a lot of small cap stocks that you're going to find in VTI is not going to be paying dividends. So that's mainly the difference. But overall, they provide similar returns because VOO does have a higher dividend yield. My next stock in this brokerage account is going to be QQQ, which is a NASDAQ. You can get all your growth and tech stocks. This one has been the best performer in this small portfolio, but I only bought 2 shares, and it's been growing pretty nicely. And then we have BND and BNDX, which are the Vanguard Total Bond Market ETFs and International Bond ETFs. Since I'm pretty young, only 24 years old, this was my mistake buying these bond ETFs. Don't really need them because since I'm so young, I have a lot of time and I can just invest all my money in riskier stuff right now. But these bond ETFs do pay out monthly dividends, which is pretty nice. But in terms of capital appreciation, there really is none. But the good news is during the March crash, the bond ETFs were the best performers. They held up their value, and it kind of saved this small portfolio during that pandemic crash. So now we're going into the main reason why you're here, the Roth IRA brokerage account. And if you don't know, a Roth IRA brokerage account you can open up with most brokers such as Charles Schwab, Fidelity, Vanguard, even M1 Finance, but you can only contribute $6,000 a year, and there's a reason why there is a contribution limit. It's because these accounts are so powerful. They're tax deferred, meaning you're not going to be paying taxes at all on your capital gains or dividends. So your money is basically growing tax-free, and it is a huge advantage for many investors. So I've been contributing to this account for 3 years. About $18,000 I've contributed, and it's grown to a little bit over 22,000. So we can take a look at my top holdings, and I am sitting on quite a few $1,000s of cash. The strategy is not to invest all 6,000 at once, but you want to invest a small amount every single month. So you're dollar cost averaging, and it's a lot safer that way. So I'm using this and waiting to buy up dips, like maybe a share or two at a time. So my main holding is VTSAX, which is the Total Stock Market Index Fund. It's pretty much the same as VTI, but it is an index fund, so I can buy fractional shares, and that's the main advantage. On Vanguard, I have set it up so every single week I invest $50 into this fund, and that is how I automatically dollar cost average my Roth IRA. So my next biggest holding is VUG, which is the Vanguard Growth ETF. You're going to find a lot of the tech stocks in here, as well as a lot of volatile and riskier stocks, a lot of growth stocks. It's a growth ETF. And it is one of the best performers in this portfolio because of the high risk, high reward. And lately the market has been absolutely nuts. It's been we're on a huge bull rally, and during these times, it's pretty good for ETFs such as the Vanguard Growth ETF. My next biggest holding is Apple, roughly $1,200. Apple is one of my favorite stocks. They pay a dividend, but I use all their products. I like what they make. They're basically a tech company. They're always innovating, and they're even trying to get into the electric vehicle space, teasing us with the Apple car, trying to compete with the Tesla, the Neo, all of those electric vehicle makers, and Apple, being a tech company, is trying to get a piece of that pie. So we have the Vanguard Value ETF. So you're going to find a lot of value stocks in this ETF. I have roughly $1,100 in it, and you're going to find stocks such as Bank of America, Coca-Cola into this ETF. A lot of high dividend stocks, pretty stable. So this one has a higher dividend yield than the growth one. We're going to find like Apple, Facebook, Tesla into VUG. My next one is going to be another Vanguard ETF. I'm a huge fan of Vanguard ETFs. They have the lowest expense ratios out of any ETFs. So the VYM is a high dividend yield ETF. It's going to choose a lot of stocks, especially in the S&P 500, with the highest dividend yield. So this is a dividend focused ETF. And in all these ETFs, I basically just reinvest them into the same stocks or ETFs. So it's going to be compounding over time. So that's VYM. And then we have Microsoft, another favorite. I love using Microsoft products. In Microsoft, I see what they're doing with Teams, all of this remote work. They're basically like Apple, one of my favorite companies to invest in. So I have roughly 2 shares, $500. I plan on adding more to this company in the upcoming months. And then we have some ARK ETFs by Cathie Wood, one of the most famous investors of all time. ARK ETFs have been performing pretty well over the past year. It's outperforming most ETFs, including the S&P 500, because they invest in a lot of risky investments, such as Tesla. They have a huge portion in Tesla, and Tesla has been doing pretty well over the past year or so. So that's driving up most of their ETFs. And then we have AMD. I really like what AMD is doing. They're overtaking Intel with their graphics cards, their chips. And basically, AMD is going to, ever since the CEO switched to Lisa Su, AMD has been seeing some huge returns in its stock price, and with this semiconductor chip shortage, AMD has been relatively flat, and I think AMD is at a great price point to jump into, because once the shortage ends, AMD, I anticipate they'll be doing some great things. And the next stock is Cloudflare. I am also a web developer, so I use Cloudflare a lot for running my CDNs and lots of protection through Cloudflare. So it's a great product, and a lot of websites use it nowadays. So the next one is going to be Dave & Buster's. This one was a little bit more risky play. I bought it in at around $18 a share, and basically it's just a pandemic play, a recovery stock. Dave & Buster's got hit really hard from the pandemic, and I saw it as a cheap opportunity to get into. I didn't invest that much money. I bought 5 shares at $18 each, and now it's at $42, so that's over doubling my investment, and I'm pretty happy with that return. Next one is going to be Disney. I like what Disney's doing with all their subscription services. There's a lot of loyal Disney fans out there. They love the Marvel movies, the TV shows, and basically Disney with all their theme parks reopening. This is also a reopening pandemic play as well. But Disney loves innovating. They love money. I see Disney growing in the future. And then lastly, we have 3 shares of Coca-Cola, which is one of my favorite dividend-paying stocks. They have a healthy, stable dividend. Everyone uses Coca-Cola products all the time, and they're very recognizable as a company. They're definitely not going anywhere, and it definitely is a great long-term hold for your portfolio. So that's about it for this video. I just quickly went over my brokerage account and my Roth IRA brokerage account, and they both total around $25,000. Of course, I keep most of my short-term investments in my Robinhood portfolio. My Roth IRA is more of a buy and hold device, not really playing options, just buying and holding shares and averaging down when I can. Please like it, and if you enjoyed the video, subscribe if you're new here. Thanks for watching.